Want to find a stock with explosive growth, a massive order book, and absolutely zero new debt? Today, we are breaking down the Q4 FY26 earnings results for Talbros Automotive components to see if it deserves a spot in your portfolio. So let's dive straight into the data to see what is driving this company's momentum. To structure our deep dive, we are breaking the performance down into 4 core quadrants. First, we will look at the Q4 performance snapshot to evaluate the immediate bottom line. Second, we will examine the company's financial and cash flow health, which acts as the core engine. Third, we will break down the segment and market analysis, providing the fuel. And finally, we will review the valuation, risks, and outlook, defining the road ahead.
Zooming in on the Q4 FY26 quarter at a glance, broad-based volume growth and robust export execution drove strong consolidated momentum. Revenue hit 240.6 crore, marking a 14% year-over-year growth. EBITDA reached 44.9 crore, a 13% year-over-year increase, and profit after tax climbed to 31.6 crore, displaying a brilliant 19% year-over-year jump.
This core profitability is expanding beautifully thanks to a structural shift toward premium, localized component sales, higher margin export orders, strict cost discipline, and lower financial costs. While the EBITDA margin moved slightly from 18.9% in FY25 to 18.7% in FY26, the PAT margin successfully expanded from 12.6% in FY25 up to 13.1% in FY26. What makes Talbros a true standout is its remarkably clean, deleveraged balance sheet. Their debt-to-equity ratio sits at a highly safe 0.10x, and net debt has actually turned negative to minus 0.05x. Cash reserves surged to 113.8 crore, meaning liquid cash buffers now comfortably exceed total corporate debt liabilities, and their underlying capital strength is further underscored by a 742.9 crore net worth. This exceptional cash flow and earnings quality is evident when looking at their full-year FY26 profit after tax of 104.1 crore, which features an elite 81.4% cash conversion rate, proving there is minimal working capital stagnation. Operating cash flow reached 84.7 crore, and free cash flow came in at 48.8 crore, which is outstanding considering it was generated even after deploying 35.9 crore in capital expenditures. This success is driven by a highly diversified growth ecosystem across their joint ventures and divisions. The Marelli Chassis JV pulled in 51.8 crore in Q4 revenue, jumping 35.6% year-over-year due to volume expansion in subframes for domestic and export OEMs. Their gasket and heat shields division brought in 164.4 crore, growing 15.4% year-over-year while maintaining a dominant 50% domestic market share. The Marugo Rubber JV earned 21.1 crore, up 23.4% year-over-year as it expands its Maruti Suzuki market share. And the Forgings division generated 76.2 crore, up 11.4% year-over-year, showing structural recovery via European Tier 1 clients. Their diversified sector mix for FY26 provides an incredible structural cushion against localized sector downturns, with broad end-market exposure spanning passenger vehicles at 35%, commercial vehicles at 22%, 2- and 3-wheelers at 16%, agricultural equipment at 14%, and other segments filling out the remaining 13%. This structural advantage is unlocking a multi-year order book with total visibility of over 1,000 crores over the next 5 years. The underlying investment thesis here is that global supply chains are actively de-risking through China Plus One and European consolidation, driving massive, direct, long-term demand straight to Talbros. This pipeline breaks down into roughly 700 crores dedicated to exports and 100 crores specifically for EV orders. On the factory floor execution side, operational efficiency remains high, with sealing at 87%,
Forgings at 85%, and the Morelli Chassis JV at 77%. This reflects tight supply chain management amidst rising global order volumes, running alongside a standard collection framework for Tier 1 global OEM suppliers, where inventory days average 61 days and receivable days average 118 days. Looking forward, the company is embarking on strategic expansion and future capex, alongside an exciting ESG catalyst. Commercial production of high-margin devulcanized rubber through their knee joint venture, Lohum Talbros Carbon Private Limited, is set to begin in July 2026. To support this growth, their current FY26 capex of 51 crore is set to double in FY27 to 103 crore, and it is fully funded through internal accruals with absolutely zero reliance on new debt. Reviewing the valuation snapshot, Talbros demonstrates strong capital efficiency with a return on capital employed of 17.9%, indicating excellent returns on deployed capital. The trailing 12-month EPS stands at 16.87 rupees, with a normalized Q4 EPS of 5.12 rupees. They also offer a reliable cash flow to investors, with a full-year dividend yield payout of 0.75 rupees, which includes a 0.55 rupee final dividend. Evaluating the objective risk-reward matrix reveals several major green flags, including secured 5-year order book visibility over 1,000 crore, a transition to a net cash positive balance sheet, and being a direct beneficiary of global supply chain shifts. However, we must note a few red flags. Maruti Suzuki accounts for 20% of revenue, which presents a client concentration risk. Geopolitical tensions could pressure shipping timelines and freight costs, and their capex doubling to 103 crore means we must closely track asset turnover to avoid any drag on their return on capital employed. Ultimately, the final verdict leaves us with 3 critical things to remember about Talbros. First, they are delivering high-quality growth, defined by a 14% year-over-year revenue expansion backed by an elite 81.4% cash conversion rate. Second, they have powerful structural tailwinds, where global OEM consolidation is driving a massive secured order book of over 1,000 crore. Third, they possess supreme financial health, fully funding a massive doubling of future capex entirely through internal cash while maintaining a negative net debt profile. What is your take on Talbros Automotive? Let us know in the comments below. If you found this Talbros earnings deep dive helpful, don't forget to like, save, and share this video. Follow and subscribe to ZinvestZ for more smart investing insights. Thanks for tuning in.